Hello everyone, and welcome back to the QQQ vs QLD Challenge channel. It's Friday evening, June 6, 2025, and that means it's time for another exciting monthly update in our long-term investing journey. If you've been following this channel, you know that every month, we invest $100 each into QQQ and QLD and share what we're learning about the market, performance, and long-term strategies. Since April 9, 2025, we've witnessed a historic market comeback. It was triggered by a major announcement from President Trump, who paused most tariffs for 90 days. This single policy shift helped spark one of the sharpest rallies we've seen in recent years, especially for tech stocks. So let's break everything down and take a deep dive into what's been happening in the broader market and what it could mean for our investing challenge. Let's begin with the performance of QQQ, which tracks the Nasdaq 100 index. Over the past 2 months, QQQ has been on a dramatic roller coaster. For the first time since March 2023, when the Golden Cross formation occurred, QQQ fell decisively below its 200-day simple moving average green line. Historically, this SMA 200 green line has served as a major support level during long-term uptrends. In the past 2 years, QQQ approached this line twice before, once in October 2023 and again in August 2024. Each time, it bounced off quickly and resumed its climb. But this time was different. This time, QQQ didn't just approach the SMA 200 green line. It broke through it decisively. This marked a critical turning point. In early April, the Nasdaq officially entered bear market territory, falling more than 20% from its recent highs. To be specific, QQQ dropped from an all-time high of $540 on February 19, 2025, to a low of $402 on April 7. That's a staggering 25% decline in just under 7 weeks. Back in April, I shared 3 historical examples to help us better understand what might come next. The first was the late 2018 correction. The second was the March 2020 COVID crash. And the third was the broader bear market of 2022. Among these, the 2018 correction seems to offer the closest parallel to what we're seeing now. Let's take a moment to review what happened in that period. In 2018, QQQ fell by 25% between October 1 and December 24. The primary driver was trade tensions between the United States and China. President Trump had initiated a tariff war, which created a wave of uncertainty. During that time, QQQ made 2 failed attempts to climb back above the SMA 200 green line. A death cross occurred on December 3, 2018. But roughly 45 days after that, QQQ rose above the SMA 50 purple line and then, in February 2019, finally climbed back above the SMA 200 green line on its second try. That second breakout marked the beginning of a powerful new uptrend, and by April 2, 2019, QQQ had formed a golden cross again. Now fast forward to 2025. The pattern is strikingly similar. On March 10, 2025, QQQ broke down below the SMA 200 green line. A death cross formed on April 11, 2025. Just like in 2018, QQQ bounced above the SMA 50 purple line, but its first attempt to reclaim the SMA 200 green line failed. Then, on its second attempt, QQQ succeeded and moved back above that long-term trend line. And here's the kicker: as of today, June 6, 2025, QQQ has climbed all the way back to $530. That's just 2% below its all-time high. Let's now zoom in on what happened during the past 2 weeks. The U.S. stock market showed volatility but overall strength after a strong rally in May. The Nasdaq Composite surged by 9.56% during the month of May 2025. It closed at 19,242 on May 30, marking its best monthly performance since November 2023. Technology stocks were once again the primary driver of gains. On June 6, 2025, the S&P 500 surged past 6,000 points, reaching its highest level since February. Tesla shares rebounded after a temporary cooldown in the Trump-Musk feud. The Dow Jones Industrial Average climbed more than 400 points. Meanwhile, the Nasdaq Composite gained 1.2%. Market sentiment improved after the May jobs report beat expectations. The report showed that 139,000 new jobs were added, and the unemployment rate held steady at 4.2%. On the policy front, Trump called on the Federal Reserve to cut interest rates by a full percentage point. In addition, high-level U.S.-China trade talks are scheduled to take place in London on Monday, which could further reduce global market tensions. Microsoft also made headlines this week by surpassing Nvidia to become the world's largest publicly traded company. This change in leadership reflects the growing importance of software and cloud infrastructure in the artificial intelligence boom. Now let's move on to the QQQ versus QLD $100 Challenge Portfolio Update. As of June 6, 2025, QQQ is trading at $530. That's a strong recovery from last month's level of $488. Since the beginning of the challenge, we've invested a total of $3,900 into QQQ. Our current unrealized gain is approximately $450, which represents a 12% return. For context, last month's return was only about 3%, with a paper gain of $130. It's encouraging to see this kind of progress. Our average cost per share for QQQ is $473. On June 2, 2025, I added 0.19 shares at a price of $519. We continue to invest automatically and consistently, without trying to time the market. For QLD, things are looking even better. We've also invested a total of $3,900 into QLD. As of now, our unrealized gain is about $550, giving us a return of approximately 14%. The average cost per share is $95. On June 2, shortly after purchasing QQQ, I bought 0.95 shares of QLD at $104. These results reflect the leveraged nature of QLD, which is designed to deliver 2 times the daily performance of the Nasdaq 100 index. While leverage increases volatility, it also provides greater upside potential when the market recovers, as we've seen this past month. Since May 2024, we've been investing at least $100 into QQQ and $100 into QLD every single month without fail. This consistent, disciplined strategy is called dollar cost averaging, or DCA. The goal is to reduce the impact of short-term market fluctuations by spreading our investments out over time. By doing this, we buy more shares when prices are low and fewer shares when prices are high, all while maintaining a long-term focus. Our approach is simple. We invest monthly. We hold long-term. We avoid panic selling. And we never use margin or leverage beyond what's already built into products like QLD. This strategy is designed to be low-risk, sustainable, and emotionally manageable, especially during periods of market turbulence. If you're curious about the data behind this strategy, I recommend checking out my 2 deep dive videos. One is titled Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, the 30-year showdown. The other is Cash vs. QQQ vs. QLD vs. TQQQ. These videos explain how long-term investing and monthly contributions can outperform more complex strategies over time. Remember, this challenge is not about chasing short-term profits. It's about building long-term wealth, $100 at a time. The market will always go through ups and downs. But if we stick to our plan, stay patient, and remain disciplined, we give ourselves the best chance of success. That wraps up our June 2025 update for the QQQ vs. QLD challenge. If you found this video helpful, be sure to like, subscribe, and leave a comment. And just a quick reminder, this video is for entertainment purposes only. I am not a financial advisor. Please make sure that your investing decisions match your personal financial goals and risk tolerance. Thank you so much for watching. I'll see you in the July update. Until then, stay focused, stay consistent, and happy investing.